Hello everyone, this is the 10th episode of my 2026 Portfolio Challenge series where I try to beat the market by testing 4 strategies that range from sensible to slightly unhinged. Each of these portfolios started out with $100,000 and currently only one of them is beating the market. We had a really rough week this week, with 3 of my portfolios dropping and the market itself also dropping nearly 2%. You can see last week's results in the second row and this week's results in the first row. S&P 500 also dropped almost 2% this week. Disclaimer, this is for entertainment and educational purposes only. I am not a financial advisor and this is not financial advice. This is all done on a paper trading account and these are all simulated trades with no real capital at risk. So in today's itinerary, it's going to be pretty short. We're going to go over a few of the portfolios' performances. This should actually... I did make a few changes. So this is from last week. Some of the watch list news and global news that we want to be talking about. So this is the war in Iran that I just want to say a few words about. And then I did not sell Celsius like I wanted to because it dropped on Monday pretty bad. And then it kept dropping on Tuesday and actually it's down almost 20% this week, maybe even 30%. I did exit Verizon on the deep value portfolio, which is, I talked about that last week. And I just noticed that the Alpaca doesn't, because it's paper trading, it doesn't simulate holding cash with returns. So at my brokerage, I get 4% yearly just for holding the cash. And I just realized that the cash doesn't do that. So I'm going to be putting the cash into Box, BOXX, or SGov. Currently, I'm leaning more till Box because that looks a bit more stable. And then I exited Nike this week in 2 portfolios, my value and my main portfolio. I redid the math and it's got a $50 price target, which is significantly lower. So I did get out at 61 and I believe it's down to 58 this week. I'll go over that, maybe the chart later. With that Nike money, I bought Nvidia. So I've got a $230 price target and I think I bought Nvidia at around 180 this week. Again, I'll probably go over that. And then a few thoughts on Robinhood's Take Flight event that they had this week. I'm pretty heavy on Robinhood because I've got a whole portfolio right now that's just Robinhood and it's like 20% of another one. So I pay attention to Robinhood. And then I want to talk a bit about US oil. I am not an oil trader, so this is obviously not financial advice, but just things that I see and things that I'm expecting. So let's go over the portfolios really quick. This is the 2026 main portfolio, which is just my gut feelings, a few value picks, and high IV plays for options. So as you can see, last week we had Nike, and this week we have quite a bit of Nvidia. I also sold out a bit of some Celsius. Yeah, you can see Celsius was 16,000 and right here it's almost 13,000, so I sold 50 Celsius. Here are my total year-to-date gains and losses for the 2026 main portfolio. This includes stocks that I have already exited, so NVO, UNH, SE, all of those I exited. And then SanDisk and Hood, I am still in. I am very bullish on both of them, so I'm not worried. Paychex, LPLA, Futu, I've exited all of those. Rivian too, now Nike as well. Yeah, it's been a rough year, as you can tell. This is the deep value portfolio, so this is just a pure forward PE play. I've put in some guardrails on it just to protect it a bit. And currently it's holding mainly cash, or not mainly, but a lot of cash. So I exited Verizon this week and I've exited MO previously. As you can see here, Verizon and MO both reached almost $2,000. I had to exit them and it's looking like FANG, F-A-N-G, is going to be the next one. I did rescan this and there's nothing new to add, so do with that what you will. My choice value portfolio, which is my own value formula picks. I've got my own value formula. I've gone over that a few times. And this is weighted by conviction, so Robinhood, Micron, and SanDisk. Well, SanDisk was dominating it, but Robinhood, Micron, Meta, I guess, as well, and then SanDisk, they're the big ones. And again, I've got quite a bit of cash in them still. Again, this portfolio is down pretty bad, mostly due to Robinhood, as we can see here. Actually, not just, but Adobe, SanDisk, and then NVO and UNH as well. But I've currently only gotten 3 profitable plays on this choice value portfolio so far, so that just goes to show you how value performs in a high-risk environment. And then my meme stock portfolio, which is just, meme stocks. So I gained a lot on GameStop at the beginning of the year, and now I'm down pretty significantly on Robinhood this year. But to be honest, it's not worrying me at all. I am very bullish on Hood. I've got Leaps in this portfolio right now, so I am not worried. So now some of the macro news. So as you guys all know, if you didn't know, there's a war in Iran right now. Israel and the US are attacking Iran. So I did some research on it. I am not a geopolitical expert either, so take everything I say with a grain of salt. But what's going on is that US oil is up. I will go over that soon. It's going to keep going up, mostly because Kuwait, which is one of the main producers of oil, it stopped oil production. So oil in the West is likely going to rise along with everywhere else. And it stopped producing oil because Iran was attacking a lot of its oil production facilities. Yeah, as you can see here, I wrote about that. So more missiles fired at the UAE and Kuwait civilian infrastructure, which is oil and data centers, than military targets in Israel or the US. So, and you can see here, Iran has shot more drones and missiles at the UAE and Kuwait than it has at Israel or any US assets. And it's all been civilian infrastructure. Basically, it's just lashing out and trying to cause a lot of economic damage. And then, so what I noticed is that Iran's strategy is trying to create a global economic crisis via the oil. It knows it cannot compete with the US and Israel. They have a combined 400 world-class ships compared to Iran's very aging and inefficient fleet. And yeah, so as you can see, US and Israel, they've currently become focused on reducing Iran's missile launching capabilities just because they know that that's the only thing Iran has right now. So it's kind of become a race of how much Iran can ruin before US and Israel manage to dismantle their offensive capabilities. US and Israel are succeeding. This graph is very misleading. I am sorry, I did not realize it when I apologized when I was looking at it. Yeah, this is a very misleading graph. But it does show the main story that 50% of Iran's launchers have been destroyed, 85% of them have been intercepted. I do not know if this is verified or not, but I do know that the amount of launches have been down significantly to the point that UAE, the Emirates, have actually reopened their airspace, as has Israel, for Arkia and Al Al flights. So it seems they're less worried right now than they were. So some of what I was reading about is that it appears that the US is trying to completely dismantle Iran's stronghold on the Strait of Hormuz. So what's happening there is that Iran has this stronghold on the Strait of Hormuz, and a bunch of oil leaves the Strait of Hormuz for the entire world. And so if the US can control that, the US basically has become, or reinstates itself as the global economic superpower. And moreover, China, who is not energy self-sufficient, I believe they import something like 70% of their oil, and 50% of that 70% comes from Iran and Venezuela. So the US previously attacked Venezuela. They took control of their oil production, and now the US is currently focused on reducing Iran's oil production. And this is going to significantly weaken China, and it's going to cause China to think twice about attacking Taiwan. That, in my opinion, seems to be the whole point of this war. It's not about the nukes currently or anything like that. This is mostly just about attacking China's economy without actually attacking China, because that would lead to World War III. We'll see, but that's what I think the US has in mind regarding this attack. So Robinhood's Take Flight event. So the main things that were unveiled there was the $695 platinum card, which it's not for me personally, but that's only because you can't keep the gold card, which I do have, which is 3% cash back on everything. You cannot keep it, so you're stuck with the 1% cash back on everything, and then you get 5% more cash back on flights and 10% on hotels. But if you look at the portal where you actually get the flights and the hotels, that's 2% more expensive than Booking.com or Google Flights. So really, you're not really getting much cash back at all. It's back down to 3% cash back, 5% minus 2, and then 7% cash back on hotels. But really, I don't go out to hotels enough to justify $695 per year on the card. And then they also talked about early dividends, which I guess that's nice. I've been asking for a while why more brokerages don't do it, because they know on the ex-dividend date, they know exactly who gets the dividends. So Robinhood is going to be giving ex-dividend or early dividends. And then they got the custodial and family accounts. I believe this was more so aimed at our current government. So Trump and his Trump accounts, they're basically saying, look, we're ready for custodial and family accounts. We're also ready for the Trump accounts. So I think Robinhood is shooting to be the trustees. Well, we know they're shooting to be the trustees, but I think this is more of signaling that they're ready to be the trustees rather than actually anything about the custodial or family accounts. And then Robinhood's Venture Fund 1 that was released this week. Nothing big news happened regarding that. And finally, we have Adobe earnings this week with a price target of $330. They are currently at $285, so that's significant upside. But really what I want to see is I want to see increased projected revenue and continuation of projected income to confirm that really everything that Claude has said is not affecting Adobe. And if they do say that, I believe Adobe will go on a pretty decent run, all things considered. Here's just some of my Adobe value targets. So I've got 340 for next year, or 330 at the end of this year. These are just projected revenues, projected incomes, and this is all just based on previous data. That's all this is. Here we got Nike. I just want to pull this up. I sold Nike at 61.24. I did lose on it. This is the 2026 value portfolio, and this is the choice value portfolio where I also sold it at roughly the same price. And I believe Nike's down currently, so that's not too bad. Yeah, Nike's already down to 57. So I'm pretty happy with that sale. Oh, I wanted to check out Adobe. So yeah, Adobe's at 280. That's actually, yeah, that's up this week. Yeah, that's a nice run that it's had. And its forward PE is significantly lower than its current PE ratio. So I do think it'll go back up. Again, my target's 330-ish. We'll see about that. And finally, I also wanted to go back around for US oil. I did not predict this correctly. I said that last week I was talking how it's going to go up to the mid 70s and then go back down. That's not what's happening clearly, with it being up to 91.26, and this closed before Kuwait said that they were going to stop their production. We'll see what happens. Let's just say I wouldn't be surprised if it jumps up to 95-ish. I don't think it's going to go all the way up to wherever this is. This is pretty significant, but especially with the US having Venezuela's oil right now. But this is a pretty significant jump, which is causing a lot of panic and inflation in the market. I mean, local oil here right now is, it was $2.30 per gallon, and right now it's $3.70 per gallon. So I'm pretty sure that's just the gas companies front running the oil prices. Okay. Thank you guys for listening. Good luck this week, and I'll see you guys next week. Bye-bye.